am here with Orlando Bravo, the founder and managing partner of Thoma Bravo, big tech buyout shop. Thank you so much for being here. I want to start with the macro situation because we saw the 75 basis point move from the Fed yesterday, further entrenching this new regime for growth companies, which you tend to traverse in terms of buyouts. I'm curious if these moves suggest to you that we're near a bottom, what you're seeing in the markets right now, and is it presenting a buying opportunity, or are we not quite there yet?
Well, first of all, it is great to see you, Leslie, here in Berlin instead of in Puerto Rico, like we spoke about before. And look, you and I spoke about it when we were in New York. Growth at all cost is over. That's what we said back then. And now everybody has gotten that memo. Everybody believes that. Now, where is the bottom here? That is so difficult to tell because now that there's so many clouds in the horizon, interest rates are going up, there's a potential big recession in front of us. Investors want profitability in software, which mainly does not exist, and then it's very hard to call a bottom of revenue multiples for these companies. Investors are trying to figure out as they re-rate these stocks, what is the bottom revenue multiple before these companies come in and get profitable.
So what would you signal to software executives right now? I mean, we've already started to see layoffs in the sector. Do you expect more pain to come as they're having more of an acute focus on profitability, on EBITDA, over just this growth mentality that's been so in focus over the last 10 years or so?
Well, I tell you what we do in private equity. And one of the things that I did yesterday during my keynote speech on software is to celebrate private equity and software. Because this asset class runs these great innovators in a really profitable way. So it shows it can be done. Now, private equity is still very small in software, and the key is inspiring the industry to get really big and accept more and more. As I say, software belongs in private equity. What we do, and what I would tell public company CEOs, is in times of crisis, it is much better to be overly conservative than overly optimistic. That is easy to say and hard to do. But what does that mean? That means that you reforecast your business for a much more difficult scenario on the top line, where you take out cost. And you do that decisively. Because if you're wrong and things turn out great, you can always readjust. But if you're right and things turn out to be quite difficult, you don't get behind your plan. You don't really have to scramble then, and then you have a big problem.
So essentially hunker down because there could be more pain to come. I want to ask you about Elon Musk. He is meeting with employees of Twitter today. It's going to theoretically get a lot of attention. There were headlines that Thoma Bravo was involved potentially at one point in the takeover of Twitter. I'm curious, are you still in discussions with them on potentially providing equity? And what do you think ultimately happens with this deal?
Great question. Well, first of all, Elon Musk is one of the greatest innovators of the century, and certainly one of the best operators. He will make this deal work. We don't have a question about that. I don't have a question about that. And yes, we looked at it. We looked at the deal in many different forms because we, as one of the largest buyout firms in the software industry, in the tech industry, we almost have a fiduciary duty to look at all the big deals. And from the headline numbers, the revenue multiples, the growth rate of the company, and the operating opportunity, it actually looks a lot like the enterprise software deals that we do. Now, at the end of the day, whenever we look at something that's adjacent to enterprise software or around tech, but it's not exactly that, we revert back to our core competency and what we do, which is these enterprise business-to-business software deals.